What's up, swing trader? Snacks here. We're going to jump in and do our watch list for Tuesday, November 11th. As always, we will start with a little bit of market breadth. Big gap up and strong close yesterday on the SPY. If we are bullish, this is exactly the price action we wanted to see. This is a triple R trigger on the indice, which if we look back into the history of this move off of tariff lows, we have one here, 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 here. We can see how good of a time this can be for some positioning for a short-term move. If we get follow through in the market, this is a fantastic opportunity to position into the leaders. In this pullback, a lot of our leaders have pulled back to their 50-day moving averages, or at the very least below the short-term moving averages. So we get our retracement. We look for the reaction. The reaction happened on Friday, the remount, which happened yesterday. And most of our leaders, we had a short list yesterday. SOFI, Hood, AVGO, and Dave were my favorites. I did not take anything though yesterday. I took my gold trade that I was talking about. I've already taken a third off of it. We'll look at that here real quick. I've taken a third off of it. Earlier up here around, it was 41.50 is where I took a third off, and I've moved my stop well into profits for the rest. So good trade there on gold, but a retracement reaction remount triple R trigger in gold is why we got in on it. And if you look back into other times that we've had major flat top breakouts, the first triple R trigger on gold for each of them have been fantastic entries here. I had one here, okay, we had one here, we had one here. Either of these would have worked. We had another following it, and then we have this major breakout, the most recent. This is our first triple R trigger off of it. You got to buy it, guys. You got to swing that bat. I'll do it every time. So got a good trade off there in gold, but let's stick with equities here. Let me finish that thought. As I said, I was looking at CRDO, SOFI, Hood, and Dave yesterday for possible entries, and if we look at the intraday price action, this is one of those times that living in Thailand really kind of screwed me, because we had a big gap and go at the open, which I can't buy that, right? And then I was looking specifically, guys, in Bootcamp. I posted this in chat. We pulled back below the 9 EMA. As you can see, the crosshair aligning on both sides. We pulled below that, and then I said buying it back through was attractive to me. Which it did happen, but it was 11:30 by that time. I was already in bed for the night. I shut the screens off and just called it a day. So, unfortunately, I was not able to get an entry in any of these, which here's the level I was looking at back over the 9. So we had the gap and go, and then roll below the 9, and I said back through the 9 was attractive to me, which did happen later in the session. SOFI really just held up for the entire day, but it pulled right back again to our entry level here, intraday, reacted off of it, pushed back up through highs. Another fantastic opportunity here in SOFI. It happens at times. I'm just not able to see the afternoon session anymore. And gap up days is really a day where I do favor the afternoon session. I just didn't stay up for it. Maybe looking at these things, I wish I had. But I would say I'm still interested through the highs on these, through yesterday's high. So CRDO through, looks like about 173 area could be interesting. SOFI, we'll just have to see the price action, but yesterday was certainly the trigger. Hood, I think through yesterday's high is attractive to me, so 139 area, and then Dave through yesterday's high, 256 area. All of those are still quite attractive to me. I would scale back the size, maybe even to like quarter size, just because yesterday was the entry. I just wasn't able to get it. I don't want to chase up too high above our ideal entry. So those were the trades that I had on Top Watch yesterday. Looks like all of them would have been good entries. Who knows if they'll work out, but as we know, the triple R hits at over 70%, and in a follow-through environment, follow-through market, it hits well over 80%. So I do expect these to work. They certainly do more often than not. So guys, I have a list here today. We'll finish up a little bit of market breadth here. We said we wanted to get the RSP above the 50, which it did close slightly above. Good sign there. I would love to see some follow through in the markets today, getting through yesterday's high. Pretty much the name of the game on everything, to see that follow through environment in the market. IWM also closing above its moving averages. Decent look. Again, I would love to see it get up through highs. Crypto, still having some issues getting legs. I would love to see some follow through in crypto, suggesting a risk on appetite throughout markets, that would really be attractive for me. Let's take a look here at the market breadth. And we look to be getting ourselves, we're at least nearing that midway point there for stocks above their 50-day moving average. Nice little curl back up towards that. I'd like to see this blue line above this midpoint here. That would mean that there are more stocks above their 50-day moving average than below, obviously, and then the 200 still remains above. I would really like to see this get some legs and follow through to the upside. It seems that every time we pop up, we roll back over, pop up, roll back over, pop up, roll back over. I'd like to see this really get moving. Same thing here with the high-low index, stocks making new highs versus new lows. Nice move back above the zero line here. So again, I would like to see it sustain some time above the zero line as opposed to just shooting right back under. Looking good on the weekly, guys. Still above the anchored VWAP stack here. Really healthy looking market despite all of the bear talk out there. I will say that I've got to remain in a risk profile B, so half size positions, one, maybe two at a time. Just don't want to oversize. We're still in a headline sensitive environment. So, we've just got to protect ourselves with position sizing and not going too heavily, too many positions at any one time, right? So one or two adds half size at a time as we look to see a sustained move out of the market. What I really want to see, and here is the issue that I have with not rolling into a risk profile A. All right, so we've got what could be a head and shoulders. If we make a lower high here in the SPY on this move and start to move back down and we break this neckline, that would be extremely bearish for the markets, and that is on the table. It's possible, but obviously we could always just shoot up through new highs and get a move like that, and we would want to buy that pullback and hold prior all-time highs. That would likely be a risk environment A, as long as the macro or headline seems stable, right? The government shutdown is on track to be ending. I don't know if we're getting the CPI yet this week or not. It would be on Thursday if we do get it. Seeing those numbers, I don't expect any sort of nasty reports coming out in that. Trump fired the last person that was doing the reports he wasn't really liking. So I think those are going to at the least be in line, even with slight beats. Not too worried about them, but I do expect volatility around those reports. We've got the next Fed policy rate decision early December. I believe it's December 13th. So we don't have that headline coming for a while. So guys, if we can get some legs in this move, okay, then I'm willing to move into a risk environment A, do more positions at full size. But for now, we'll stick to a B, okay? Half size, couple positions on at a time is all we need to make money, guys. We're using options for leverage. I use options for leverage. So I'm still able to actually see significant gains even at half size and just a couple positions on at a time. Guys, these moves that we're capturing are anywhere from 60 to 200% moves, even though the underlying move may only be 5 to 10%, by selectively using option contracts. Simple calls and puts, guys, is all I do. I do not complicate things, okay? I do not hedge. I do not straddle, none of it. I position in the same way that I would with shares, and then I typically buy 30 to 60 day contract. It depends on earnings, all things that I teach you in my bootcamp, guys. Do consider joining that. If you're struggling in 2025, you should be making money this year. It's really just that simple. I'm sorry if you're not. If you're struggling, I understand how difficult, especially mentally, that can be. So look, guys, my bootcamp is different in the sense that it is me leaning over your shoulder, mentoring you for 60 days. Honestly, I'll do it longer if you need it, if you work with me, okay? If you apply yourself and you need a little more guidance, even when that 60-day timeline is up for you, I will continue working with you. The reason I'm doing this, or the reason I started this, was because, I have an edge, obviously, that I can share that significantly outperforms the market. So surely there's value in that. But for me, I wanted to build a community, okay? And if I help you guys, if I teach you guys how to make some money, control your risk, manage your emotions, and you'll stick around. And the chat is getting more and more active, right? So I'm getting what I want out of it, which is a community that I can relate to and that I can tap into and talk to. The screens, this office I have out here is quite lonely at night. In Thailand, I'm trading the night session. My family's asleep. I'm all alone, or was all alone for a while. So I started the boot camp for that reason. That was for me. But there's certainly a ton of value in the over a decade of the markets I've been in. I teach you 6 models that outperform the market. All of them have over a 50% hit rate, most over 70, but all over 50% with a minimum of 2 are money printers. But more than that, I teach you how to manage your risk properly so you're not just making money, but you're compounding it over time. I will give you an edge you can leverage for the rest of your life. They are all very simple continuation patterns on the leaders. And then there's the narrative play, which you get to speculate a little bit, but we still do within structure. But anyways, look, guys, do consider it. If you're struggling in these markets, you need help. If you can learn to control yourself and mechanically execute an edge that you know to have statistical significance, the market can give you absolute freedom, time, financial, and locational freedom. Guys, I want to help give you that. That is why that, among needing a community, some people to talk to and hang out with, is why I started this boot camp. Do consider it if you're struggling in these markets. So today I have a pretty tight watch list for you. I do have to give you some short ideas, okay? I'm not saying I'm going to try to front run any of these, but if they trigger, if more specifically we get that slightly nastier scenario, right, of a head and shoulders in the market, if we make a lower high here and break this neckline, okay, then I'm going to short some stuff. It's just that simple. I got a couple of those that I'll give you today, but we're going to focus on the triple R's to the upside. Triple R is very simple, guys. It is a leader in a trend respecting structure, higher highs, higher low, in a trend backed by growing fundamentals. These are the companies that Wall Street positions into for months to years at a time every time they go on sale. So we wait for them to retrace, go on sale. Okay, we don't buy breakouts, we don't buy all-time highs. We wait for a retracement in a trending stock backed by growing fundamentals. And then we look for a reaction off of our level, the 50 prior resistance now becoming support. We look for a reaction. I'll show you here in the chart, and then a remount of the 9. So resumption of trend, retracement, reaction, remount. The resumption of trend is what we buy, and we know that because we are doing this in the leaders, that Wall Street is at our backs buying this with us. And this is why you see good companies trend for months and years at a time. Every time they go on sale, Wall Street buys them, okay, and push them back onto trend towards recent highs or even sometimes new all-time highs. But because we buy below that breakout level, we don't even need new highs to get a killer trade. I'm talking 60 to 200% in a small move back towards all-time highs. So we'll look at some stuff here. As I mentioned there earlier, I like Hood through yesterday's high, okay? Still on the radar, we'll put that line in there. I like Hood through yesterday's high. An inside day would be okay with me, and then that would mean tomorrow through top of range through about 139 is the trigger for me on Hood. I like PEGA, nice reaction to earnings, and I think this was a bit of a macro situation that pulled them back. But look, guys, this is a shake and go with triple R trigger. Shake and go is another one of my 5 continuation models on the leaders. You look for a breakout, a fake out, a shakeout, but then it pulls into structure. It does not break structure, meaning it made a higher low. It pulled right back into structure, the prior resistance level, the prior all-time high level, right into our 50. This is a retracement reaction at or around our level. We're looking for the remount. And again, this is a shake and go, breakout, fake out, shakeout, pull into structure, held structure, and remount in the 9. So it's a shake and go and a triple R trigger. Triple R is a retracement, reaction, remount, right at the prior all-time high level. This is absolutely beautiful. If we have a follow-through type market today, this back over this prior all-time high, remount in the 9, triple R trigger, shake and go, remount of all-time high levels, all of the things, guys, this is gorgeous here, and I could take it. Rocket Lab, this we won't be able to see. I will just pull up the 5-minute here. Give me 1 second. Extended hours. We are looking to probably open around 56. So we're going to be remounting our major moving averages off of earnings. Typically, I like to let this be a peg play, like an earnings gap up, but this one isn't too big. Really what it's doing, you could almost view this the exact same way, guys. Look, we get a breakout. I don't like it to take so long. I like it to be more so in just a few days or a week or less. My shake and goes. This really went sideways for a while and then it rolled over with the market. But at the end of the day, it's a shakeout, pull back into structure, made a higher low. Okay, we're getting a reaction and a remount. So it's a triple R. It's a peg play, right? A power earnings gap. It's going to be a small gap. I typically like about a 10% gap up on my peg plays. But look, this is almost 4 continuation models here on 1 leader. But at the end of the day, the real price structure that I like is a retracement reaction. This is the reaction candle, okay, and a remount of our moving averages. And that should happen off of earnings. This is probably going to be quite an attractive entry for me here today. I will be watching it on Rocket Lab. Guys, same thing here again. All right, we get a shake and go. So you get a breakout, fake out, shake out, pull into structure, high or low, holding structure, reaction candle, this hammer right here, right, on Friday, and we're getting a remount of the 50. Over the 9 here is a trigger for me on shop that I will be looking at. Another shake and go with the triple R trigger on shop. We've got MP, we've got precious metals and minerals, all of these things beginning to get some heat. We are through earnings on this thing. Back over the 50 is attractive to me here on MP. Retracement, reaction candle. All right, I need the remount to be of the 50 because that is what's on top, okay? I'm not going to buy right into resistance. Let it clear resistance, which is the 50 here, and that is a trigger for me on MP. And we've got SOFI, one that I would have liked to have gotten into this yesterday, to be completely honest. But if we get a soft open, then what I'll do is buy it through yesterday's high. Soft open means we open below yesterday's price. So it would be a red to green on yesterday's close. If you want to be slightly more safe, then you could do yesterday's high as your entry there on SOFI. I still do love it. And this is an IPO cycle, another one of my 5 continuation pattern. Quickly, the idea of an IPO cycle is once they put in their IPO cycle, generally the leaders will repeat the price range of the IPO cycle to the upside within the time range. So that is why I duplicated that box. So what I am saying is that this is very likely, okay, to reach the top of that golden box by the end of it, okay? And typically they do it faster. Go look at any of the leaders. Come to my bootcamp, guys, where I show you a couple dozen times where this works. It works on the leaders more often than not. So this is something, if you want a longer term play, this is a fantastic time to get into this, okay? As long as it holds structure, meaning above 25, I don't think there's any reason not to be holding this guy for the longer term idea of an IPO cycle. I really do like SOFI, guys, so I'm looking for a way into it. And yesterday was the triple R trigger retracement, reaction candle, and a remount of the 9, guys. That was a triple R trigger yesterday on SOFI, and we've got a couple more here. I still like Dave. As I said, through yesterday's high is a good spot to watch, but alternatively, you could look at, again, if we get a soft open, you could get the red to green on yesterday's close. That's another way into it. But yesterday was really the trigger there on a retracement, reaction, remount of the 9 for Dave. And we've got CRDO. Same thing, guys. Through yesterday's high is a green light for me on CRDO. Something I can't imagine people wanting to be short into earnings on. One of the highest revenue growth companies in the world. I think this guy is very likely to push into earnings. So it's certainly on the radar. And for the shorts, guys, I got to show you some. All right, as I said, one last time, I'll show you what I'm looking at here on the SPY. If we make a lower high and roll over and we break this neckline here, then we need to be shorting that move if that happens. So it's on our radar. We don't always like to be overly bullish. We don't like to be overly bearish, right? We have to build 2 scenarios and be reactive, not overly predictive, but we can use market breadth, general patterns to build scenarios. And that's what I see, guys. We're either going to get, maybe some chop, but we're either going to get new highs or we're going to roll over. Okay. It's going to be one of those 2 scenarios. And what I see, if it happens to be the rollover scenario, what I see it looking like is what I showed you there, is that head and shoulders and breaking that neckline, we want to be doing some shorts. So here are the ones that I see here. Rhythm. All right, nasty look here on Rhythm, breaking down off of earnings, and we've got the support level. If we break this, you don't have to buy the breakdown, okay? You can let it break down, okay, and then pull back up, and then you would want your first triple R after that, and it would be somewhere in that area. That is where you want to be looking for a short on Rhythm. Celsius, same thing. All right, breaking down on earnings. If this does continue to push up a little bit and this 9 comes down here and we can get a trigger to the downside, that aligns with the market rolling over. All right, that's the kind of idea I'm looking for. Or it just rolls over and we wait for the first retracement, reaction, remount. Okay, it's the same thing. just to the downside. We want to short that move. And we've got a few more here. Let me finish my thought here on Celsius. One of the reasons why I do like this short thesis here, I would take it structurally. It would be a peg play to the downside, or it would be a triple R trigger to the downside. I would take it because of one of my models. But, there's nothing wrong with like having a fundamental theory or maybe a narrative of why you think a short may work. Doesn't mean I'm going to just blindly take it, right? I still need one of my models to trigger. But the idea here for Celsius, without taking in a year to explain this, is that consumers seem to be tapped in America. There's just a lot of evidence showing this. Like, dude, who's buying fucking $9 waters if, you're out of money, right? And that's what these people sell, guys. I can see a scenario where these guys are going to bleed out here for a little while if the consumer remains struggling in the United States. And same theory here in Dash, guys. But you can look at this as a peg play to the downside. We'll jump over here and look at our peg play watch list. But peg plays, very simply, we'll do Dash first here. Typically for a peg play, we're looking to the upside, but it works the same way to the downside, all right? You get a gap down of 10% or more, 5 to 10% depending on the market cap, okay? 10% or more on 2x volume. We got that here in Dash. So you put in a fixed range volume profile with a point of control, which is this black dotted line, and then you put in an anchored VWAP, which is that orange line you see in there as well. And if we get price below both of those and the anchored VWAP is at that point sloping downward and price breaches it and this point of control, that is a trigger for a peg play to the downside. Same exact thing to the upside. So that would be a trigger for us there on Dash. And then again, same thing. Why are people, if people are running out of money, running out of credit, all of the things, why are you going to pay $27 for a $6 hamburger is the theory behind the short here, but the trigger would be a peg play to the downside. And a few more here. AMSC, same deal, peg play downside. All right, this is getting nasty. We'll look at it here. AMSC, peg play to the downside. All right, this looks like it very likely may trigger today, so it's on my radar. I do like to align it with a bear market though. Okay, we're in a bull market, right? So I don't know if I'll front run this, but it is attractive. It really is. But we want that orange line to begin sloping down today and price getting below both. That's a green light for me there to short AMSC. ALSA is another one that we are looking at here to the short side. If we can get another day maybe of this thing pushing up, would be kind of attractive, and let this 9 come, right? And then rolling down through that 9, we could trigger triple R to the downside on it. We've got ANET here, got a nasty look, okay? Nasty look here, guys. Plenty of room to that 200. There are a few different ways to get us into that. You've got a downside peg play, and this 9 is catching up. If we get a little more, again, a push up, and this 9 comes down, and curls like that, you get some puts coming back down through that 9, targeting recent or new lows on the move. All right, that is attractive to me. ALAB has also got the look. This is a little bit more structurally what I'm talking about here. So if this continues to push up a bit more, you can see where this 9 would be about there. And if the market happens to roll over, we would take some puts through that 9 and target recent or new high levels, wherever our 2 to 1 wound up being, right? We're always looking for at least 2 to 1 on triple R. We've got QBTS. All right, the quantum sector is still looking pretty nasty, guys. So, this looks like it could even trigger today. I think RGTI reported earnings yesterday. Freaking horrible earnings, but I think they're rolling down about 2%. So look, guys, if they're going to hold up this quantum space purely on speculation of the future technology, if they're going to put a premium on that, you can't fight it. You cannot fight it. If this stuff keeps pushing up, we got to wait for it to really break down. I would say it's not done it yet. I need this to break down, make a convincing new low, okay, and then push back up, and we'll short that move, right? We would take this short right there. That's what's attracted to me in quantum. IONQ has the same look. All right, so that's some ideas for you short if we need to take them. But I'm favoring long, guys. We are in a raging bull market until proven otherwise, okay? We cannot even break structure, I would say, on the daily. Like, yeah, we breached it briefly. to make a lower low, but look, let's move over to the weekly. Look, guys, we are nowhere near making a new low on this pullback move here. Guys, this is beautiful price action. We're getting pullbacks that are getting bought up. 2025 is the year of buying the dip. It remains so, and until proven otherwise, or unless we get a lower high that rolls and breaches that neckline, we are bullish until proven otherwise. Guys, stay safe, manage your risks. Let's go make some money. I'll see you soon.